With that, let's welcome in our panelist, Anthony Esposito, CEO and founder of Ascalon 6 Capital. Brandon Arnold's here, Executive VP of the National Taxpayers Union. Welcome to you both. No panicins here, right? I think is what Trump had warned along the way. So, Anthony, we'll start with you. We mentioned a few headlines here, right? The GDP's up. You've got these trade deals expected. What will you be watching for the Fed decision today, and how do those headlines play into what Jerome Powell is thinking about?
I don't think the headlines will play into Jerome Powell's decision at all, and they should, but they won't. I think Jerome Powell is politicized. He's proven himself to be. He's mismanaged monetary policy. He's mismanaged the balance sheet. He's losing money on an annual basis of about $100 billion. I don't think he's looking at anything, and I don't think he's data dependent. I think he is trying to move along a path which he's predetermined, and it's not in the best interest of the United States, of the administration, or of our economy.
Yeah, well, Brandon, from what we know, the Fed is expected to keep rates unchanged. At least that's what we heard before the GDP number came out. And this isn't a smidge, right? The economists predicted, okay, around 2.3%, something like that. And this wasn't 2.4. And even then, you're talking, okay, good, you're in the green, right? This is a almost 1 point jump that you've seen in just the second quarter. Do you think that may move the needle for the Fed Chair Jay Powell?
I don't think it's going to move the needle at all. I mean, if the message here is that the economy is booming, then that really reduces the need for a rate cut at this point. But you look at the numbers here with the GDP figures, the top line number, great, but if you start to dig into it a little bit, a lot of the reason why the numbers are so strong is because imports are falling. And that's one of the reasons why we saw negative GDP figures in the first quarter of this year. That's because imports increased dramatically as businesses try to get ahead of tariffs. Now that is reversing, that's why the GDP numbers are also reversing. So there are some signs for concern there, because if we do see, again, imports continue to fall, that could have upward pressure on prices, which, again, is going to factor into how the Fed decides to go on rates.
Let me just stay with that point, Brandon. I was reading about that, too. And so if you're talking about imports, but consumers are buying. There is an increase in spending in this report as well. Does that mean they're buying domestically?
It means that they're just buying stuff, and they're buying stuff. We don't know exactly why, but there is also that sentiment there that exists in the business community that consumers want to make those big purchases, buy that extra furniture, buy that automobile, what have you, before tariffs would hit. And now that there is some additional certainty on the tariff front, that is going to be the real question mark as we observe the broad economy. How are consumers, how are businesses going to react now that we see 15% tariffs as the kind of marker for most of these trade agreements? So there's still a lot of uncertainty out there, even as these trade developments start to materialize and start to gain shape. And that's really going to be the litmus test for this economy going forward.
All right. Well, you mentioned these trade agreements that are ongoing. Treasury Secretary Scott Bessent meeting with some Chinese counterparts recently. He's got an update on where things stand right now with China.
I think we had great momentum going into the meeting thanks to the president's trade deals. I think that the Chinese were surprised by the magnitude of the Japan deal, by the magnitude and the terms of the European deal. So I think that they're never compliant, but I believe that they were in more of a mood for a wide-ranging discussion.
There's been some reporting, Anthony, that Scott Bessent is going to be discussing what his findings with the president even today. So what does that tell you about the possibility of this deal becoming reality?
I think the deal will become a reality. I think at the end of the day, China is obviously a major trade partner, top 5 trade partner with us, the largest global trade partner, period. I think that they are a massive surplus country with the U.S. They need to come to the table and come to a deal, and we would like to get to the table and get to a deal. So we will get there, but I do see an extension coming. It's a very complicated situation with China, whether you're talking about sanctioned oil purchases from Russia, fentanyl production, and the list goes on. It is very complicated, and at the end of the day, they are an adversary. They are a global adversary. So this negotiation, we have positioned ourselves well through the wins so far. through trade negotiations with other nations. The China negotiations will get to a deal. I just think it's going to take a little bit longer. So I do expect an extension there.
Sure. We can agree on that. Brandon, let me ask you about the Scotland trip with President Trump. This was not an official state visit, but we know he met with the president of the European Commission, obviously the British Prime Minister as well, refining their trade deal. But I want to get back to the EU deal. I mean, this was a big one here. Just showing you some highlights. A 15% tariff on European exports. The EU to invest $600 billion into the United States. The buying of $750 billion of U.S. energy, major highlight there, as well as buying U.S. military equipment and a few other items. But those are just the sticking points, if you will, of this EU deal. Brandon, I challenge you to find the negative side of this deal, if you can.
All right. Well, I'm always up for finding negative things, but here's what's problematic in my mind is what's not on that list. EU is regulating American companies through their digital regulation scheme. That should be resolved in this trade agreement. We should pare back, eliminate entirely, if we can, any regulation that the EU is imposing on American companies. That needs to be part of the trade deal. There's still details that haven't emerged yet, but that so far has not been part of the puzzle, and that's a big disappointment.
All right. We also learned this morning that President Trump is sticking to that August 1st deadline for countries to come to the table, and also says that India will pay a 25% tariff plus penalty for importing military equipment, again, if that deal with Russia isn't made. So a lot of moving pieces. We're following it all. Anthony and Brandon, thanks so much for coming on today.
Thank you.
A lot.